Good evening and welcome to this session of the live learning classes organized by the Board of Studies of the Institute of Chartered Accountants of India. As usual, we have a number of people who have greeted and think. There is a huge message from Mr. Rituraj Honmane. So I'm not going to read it now because I just don't have time. What I'm going to do is I'm going to copy it and store it. And then maybe later on, sir, when I get the time, I will read it. And I will, if necessary, I will react to it. Okay, I will react to it. At this stage, I'm not going to read it because just don't have the time for it. Please don't mistake me. You've taken a lot of time to think, and I think it's more an opinion that you are having, which I would definitely like to understand before I react, for which I need to read it. This is not the way I'm going to do it. Not in a hurry, when without understanding, I'm not going to react it. So you will have to bear with me that this will not be answered or reacted to during today's session. Maybe at a later session, I will react or give my view, if any. Thank you. Good. So thank you very much for your input. No, I can't, because today we are going to get into another topic which is carved out of your final syllabus and pushed to intermediate. The Foreign Exchange Management Act, 1999. This was originally in the final syllabus, and rightly the Board of Studies has felt that this knowledge is relevant for intermediate students who are going to take up articleship. And because you will have to deal with the FEMA, especially those topics which we are going to see today will become very relevant for you when you are doing your articleship. You will have to prepare Form 15 CACB. You'll have to engage in current account transactions, advise your clients on current account transactions, whether they can do it or not. Formalities are there. So those cases will be very important. Also, you may have to identify whether it is a capital account transaction or not. So that to that extent, the syllabus is there, not too complicated, not too small either. It's a good addition. Today we will see the Foreign Exchange Management Act, 1999. So what it is and all we'll discuss. Basically, we have to talk about the preamble to this act, which aims to consolidate and amend the law relating to foreign exchange with the objective of facilitating external trade and payments and for promoting the orderly development and maintenance of foreign exchange market in India. Now, we are begging your question. What is foreign exchange? Okay, we will define it. Don't worry about it. Thank you, Mr. Anshul Verma, for those nice words. What you need to really understand is India, or any country for that matter, does not live in vacuum, does not and does not have to live in vacuum. It lives in a committee of other countries, each of which has its own economic equations, each of which has its own macroeconomic features, and each of which has its own currency. So when we are making payments from one country to another country, obviously you cannot make it in a single currency. There is no such single currency unless you are in the European Union. You are part of the European Union, in which case all those countries in the European Union use a single currency, which is the euro. They use the single currency, which is the euro, right? So we have our own currency now. We have a symbol, which is the rupee symbol. You have some of the major currencies like the pound or the dollar or the yen and all that. Okay. Euro is also a very powerful currency. There are many currencies. Easily put 100 to 200 active currencies in the world. So when we deal with those countries, when we buy goods from those countries or sell goods, it is called external trade. External trade, foreign trade. So that foreign trade will result in payment of money in foreign currency. That is called foreign exchange. Okay, when money is flowing in from one country to another in a particular currency, it's called foreign exchange. Popularly abbreviated to Forex. Foreign exchange, we also call it Forex. Okay. More about it later. Right now, one more thing you might want to understand is before FEMA, there was FERA, Foreign Exchange Regulation Act. Very, very stringent law, punishment law. Okay. That was a time when misguided economics, I'm using the word very carefully, 1947 to 1991, misguided economics, false socialism, not understanding the economic forces, trying to control the economic forces, including foreign exchange, trying to control them and failing miserably. Okay, on the one hand, corruption on the other hand, licensing on the third, so on and so forth, led to a total collapse of the Indian economy in 1991. Literally. And one major indicator was foreign exchange reserves had gone down. Meaning, you might ask, what do you mean by foreign exchange reserves? I'll explain to you. By using this diagram, you will understand what do you mean by foreign exchange reserve. Please understand, India, and I'm using for sake of clarity, USA. There is nothing specific about this country. There is nothing that I'm choosing this country over others. I'm choosing this country possibly because this is one of the major import. We import a lot from this country and we also export to this country. There's a true export and import. No. So India exports to USA. A lot of exports go there, especially garments. Many things go to USA. We also import, including defense. Many things we import from USA, right? So both imports are there, exports are there. Obviously, when an exporter in India, just listen to me, you will understand this. When an exporter in India exports goods to USA, he sells goods to a USA, then he has to be paid. Now, the Indian exporter will become a debtor of the US custom. So India will be getting, when we export goods, we will be getting money from that country. By the same token, when we import from that country, when there is an importer in India, he imports, he has to make the payment to that country. So money will be going out. Now, let us say that India and USA are having continuous trading. Export happening, import happening, export happening. Now, at one point in time, okay, individually exporters and importers will settle account. That is one thing. But when the payment is to be made, when the Indian importer has to make payment to USA, US party will ask payment in which currency? In rupee? No. He will want in dollar. Right? So who has dollar? I don't have dollar. Who controls the dollar? Dollar is centrally controlled by the Reserve Bank of India. The total dollars that are there with us as of any moment is monitored and controlled by the Reserve Bank of India. So whenever an exporter exports goods, he will get his payment in foreign exchange, meaning US dollar, a currency other than Indian currency. Right? That US dollar belongs to the government of India. Please listen to me. That US dollar, see, the equivalent INR will be given to the exporter, but the US dollar belongs to the government of India. So the government of India will keep collecting all the US dollar and holding. Whenever an importer wants to make payment, now it has to come only out of this. Because I cannot print dollar. No, nobody. US government only can print dollar. Okay. So India will export and get dollar. We will keep it. Then we will import, we have to pay in dollar. We have to use this dollar only. So in 1991, India reached a stage where their ability to pay for the import, the Indian government's ability to pay for the import was they could pay only for the next 3 days. After that, no, please don't confuse. Money is there, INR mein, but I don't have dollar. So where will I get the dollar from? Yes, I have to go for borrowing. I have to go back to USA, to the Asian Development Bank, to the International Monetary Fund with a begging bowl and say, please give me money, loan. This time when we went, the US government said, the International Monetary Fund said in 1991, hey, you guys are playing too much with us. No, from now on, you peg your currency with us and immediately devalue your currency. Okay, so that straight away see, at that time, if I remember right, 45 rupees was a dollar. If I forget correctly, 45, 50 rupees was $1 was equal to 50 rupees. They said you devalue it. $1 will be equal to $1 will equal to 100 rupees. Because inflation, your pressure is there. Your need is, your demand for dollar is high. So you pay high like that. So when this all started happening, a man called Dr. Manmohan Singh went to US government and he said, look here, International Monetary Fund, which is basically US government, and said, look here, give me time, give me 5 years. On certain macroeconomic parameters, my country will perform. In the meantime, don't push devaluation on me. Allow me to do it my way. So the International Monetary Fund, for many reasons, said, yes, this country is trying to come out of a false sense of socialism and trying to enter the free market. We have to give them a chance. So they said, go, 5 years you have time. But they said GDP, the gross domestic product, the income of all the people and companies in your country should go up. Inflation should come to control. Then come and talk to me, we'll discuss. To do this, Manmohan needed to do certain things. And one of the things he did was throw out the Foreign Exchange Regulation Act and allow Foreign Exchange Management Act, by which he said, we won't stringently monitor Forex anymore. You guys buy, sell, you get dollar, you do whatever you want with it. So long as you manage it efficiently, we will not control you too much. On regular transactions like purchase of goods, sales of goods, purchase of capital good and all, I will not interfere with you. You want to import machinery, do it. You want payment, take it. Do it. We'll give you freely. But where will the foreign exchange come from? Because we don't have it. So the first thing Manmohan did was he liberalized investment in India. The Indian government went to the foreign countries and said, please come and invest in us. We will make the law easier for you. We will give you incentives. So we started attracting foreign direct investment into India. So when this foreign direct investment came, it came in foreign exchange. Means if a US company invests in India, either on its own or through a subsidiary or joint venture, automatically it brought dollar into India. So suddenly a huge inflow of dollars started coming into India through FDI, foreign direct investment. It reached a stage where so much foreign exchange was available with us that the Indian government felt, hey, we've got surplus. You want to go abroad and invest? Go. If you want to make an investment in a foreign country, if you want to extend your business to a foreign country, start a overseas office or overseas subsidiary, go ahead and do it. Invest. We will give you that money. So they took the Forex. Please again remember, when they say give you, the Indian government won't give it free. You give him INR, he will give you dollar, which he will allow you to take to foreign country. Invest. So ODI, overseas investment. So what happened? Can you see the two distinct flows in the diagram? One is import of goods and export of goods. Basically trade and other payments from individuals in India to individuals abroad or purchase of goods by individuals. Okay. For example, when you buy something online and you are getting it from US, you can pay for it. These transactions are called current account. They relate to the P&L. Basically, they are purchase, sales, etc. Of course, when we buy capital goods, that is also current account transaction. Because for him it is a sale, for me it is a purchase. Okay. No, but suppose it is to do with investment or acquisition of capital assets, etc. Then these two together are called capital account. No. What the Indian government did was they liberalized the foreign exchange dealings. They said, feel free. Once upon a time, I'm talking about 80s or even little early 90s, if you wanted to pay for imports, commercial, you're buying bulk chemicals, importing containers, you have to go to the bank, you have to make an application, wait for 10 days, it will be approved by RBI, come back, then only the bank will give you the foreign exchange. Thereafter, you have to pay. Or else, you have to go to the bank, apply, asked him to give an advanced TT and then import the goods, submit the bill of entry. It was a real pain. Today it is liberalized. You simply file a Form 15 CA, straight away he releases the payment, import the goods, except you have to ensure that the goods are imported and you have to show proof that the services have been received. You are allowed to pay freely. So in current account, you are given a lot of freedom. Whereas on capital account, still there are certain restrictions. So the law we are going to now see is about the conditions or restrictions or rules relating to getting foreign exchange and paying through foreign exchange. But foreign exchange is a very, very important reserve, especially the US dollar, euro. Okay, so this is the point, right? So broadly, this topic will be about what are the rules and regulations, what are the conditions and all that. And you should also appreciate that there are two types of transactions: current account, capital account, right? And there are different rules for them. We'll see that in a short way. That is about it. Your syllabus is about definitions, certain simple rules, and current account and capital account. Okay. Correct. As Mr. Parsati correctly says, we had a huge trade deficit. The trade deficit meant we had a forex. But today we are not in that position. Today our forex reserves are very comfortable, thanks to FDI. Okay, we are very comfortable and we are able to do it. Okay, so not a problem. So we'll begin at the beginning. Before we go to the definition of foreign exchange, first you should understand what is currency. Currency means currency notes, postal notes, etc., issued by the government or by the Reserve Bank of India. Okay, Reserve Bank of India. So the point here is the Reserve Bank of India prints the currency notes, which are expressed in Indian rupees. So when a currency is expressed or drawn in Indian rupees, it is Indian currency. But does not include the special 1 rupee note. I don't know if you've even seen that note. Okay, I can't show you the note. It is on my table. I have that special 1 rupee note on my table, which is a special note, which is not, because why is the special 1 rupee note important? Because when you are free, or if you have access to your purse, money purse, just to take out any currency note. And I have only 500 rupee note. It's okay. You can take it out. So just wanted to see this. Of course, you can look at the sacred face of Mahatma Gandhi ji. But just next to Gandhi ji, you will find there is one blog here, and I will read what it says. It says, I promise to pay the bearer the sum of 500 rupees. So this is basically a promissory note. Who has signed it? The Reserve Bank of India governor has signed it. I don't know who it is, which man is, but he signed it. So what does it mean? It means if I take this paper to the Reserve Bank, they will give me 500 rupees. What they mean 500 rupees? Is this not 500 rupees? It is. It is a promise by the Reserve Bank, and it is valid. It is a legal tender. This is an Indian currency. The special 1 rupee note is not a promise. It was issued by the government of India directly. Okay. If you gave that 1 rupee note, equivalent gold will be given to you. There is a difference between the special 1 rupee note and all the remaining notes. Recently, certain notes were demonetized and the banned 1,000 rupee note and the old 500 rupee note were banned. Now you have a 500 rupee note. Even the 2,000 rupee notes are being slowly taken out of the circular. Okay, but be careful. This is only for currency notes, which are expressed in Indian currency. So Indian currency means currency which is expressed or drawn. Are you able to see? They say drawn. Drawn means what? A promissory note is drawn by the maker, who is the governor. You are the payee. But bearer can get it. Okay. So which is drawn in Indian rupees. Right? No problem. Foreign currency means any currency other than Indian currency. That's all. If it is not expressed in Indian currency, it is foreign currency. Okay. Any currency other than Indian currency. Which is why when the Bitcoins became a little popular, no, people started asking an important question because they started calling it Bitcoins and they started giving it another name also. They started calling it cryptocurrency. So the minute we said currency, many of us professionals started asking these Bitcoin wallahs, hey, are you a currency? Yes. No, 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 no. We are not a currency. Why? Because the minute they say they are a currency, the minute they agree that they are a currency, they will squarely fall into this category. Means foreign currency means any currency, because definitely Bitcoin is not an Indian currency. It is not expressed in Indian rupees. So it is, I don't care what it is expressed in, but it is not an Indian currency, straight away foreign currency. So they double bulty, they went back. And this Bitcoin wallahs clearly said, no, 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 we are not currency. Then why are you calling yourself cryptocurrency? That is why they started calling themselves, what is that, e-assets or digital assets. All sorts of names they started giving themselves other than currency. Because the minute they say currency, they will come under the stringent control of the Foreign Exchange Management Act, which they don't want to do now. Okay. So though they say, because the reason why they are not a currency is because Bitcoins are not issued by any sovereign republic or sovereign country. Okay. Okay. Which is, I'm not trying to get into Bitcoins here. I'm only trying to tell you Bitcoins are not currency. Can never be, at least not under this definition. If they say they are currency, straight away they are bound by Forex, foreign exchange law, which they are not. Okay. Fine. So all other currencies will come. You name it, it is there. Any currency is a foreign currency. Yeah, if you have one, but my suggestion, don't exchange it. They are valuable notes. I have about 10 of them. One I keep on my table. Many people ask me, why are you having, sir, 1 rupee note on your table? That is to remind me that even to earn that 1 rupee, I have to struggle. My sweat I have to give. Not 1 rupee is also valuable. This is a message to me and my employees. 1 rupee is valuable. Don't underestimate 1 rupee. If you can save cost, save it. If you can reduce the power consumption, reduce it. If you can use paper less, use both sides of the paper. Please do it. Not only money, every resource is valuable. You have to use it carefully. So this is the message I get whenever I see that small 1 rupee note, which will be in almost violet lilac color note. So it can be exchanged, definitely. But please don't do it. It is, what do you call it? It is a collector's item. It has antique value. Don't give it. Keep it safely. It will be worth much more than 1 rupee. I'm sure for a collector who collects numismatic matters, it will be very, very valuable 1 rupee. Don't give it. Very few are there in India now. If you have one, keep it safely with you. Don't go and exchange it. If you have 20, then good. Keep it safely. Keep it in your locker and keep it safely. Yeah, you can collect. There are a lot of people. You are not alone, madam. See, foreign currency you can collect. What is that? In fact, whenever I go abroad and come back, whichever country I come back from, I exchange all the notes. Finally, 1 or 2 notes my son and I will retain. So lowest denomination or little high denomination notes. Recently, we were traveling in Dubai, the Emirates and Muscat and all. 1 riyal we will retain, 1 dirham we will retain, just forever. Keep it as a sort of thing. It's good to have. If you collect it, good. Keep it, analyze it. And there are some special currency. See, once you put it in your collection, it is no longer currency. Are you able to understand? Only when it is used for buying and selling goods and services, it becomes currency. Otherwise, it's just like any other thing. It is like a watch. It is an object that you own. Anyway, I don't know, madam, about the 25 paisa and all. I don't know. Keep it with you. Don't keep 2000 rupee note. Please surrender it immediately. They will become invalid after some time. Don't keep the 2000 rupee notes. Okay, good. Now we have seen foreign currency. Now, foreign currency is only the notes, whereas foreign exchange, it means foreign currency. So when I say US dollar, it is foreign exchange and includes deposits, credits, and balances payable in any foreign currency, drafts, traveler's checks, letters of credit, or bills of exchange expressed or drawn in Indian currency, but payable in any foreign currency. Okay, reverse. Drafts, travelers' checks, letters of credit, bills of exchange drawn by banks, institutions, or persons outside India but payable in Indian currency. These are called Forex transactions. Whenever you are dealing in some other currency, it is a Forex transaction. Take a simple example, easy example. Today, that is a better example. I told you I was traveling abroad. Before going abroad, I applied for and received a card. It's called a Scapia card. The Scapia card is a very nice card. It's a Forex card. There's no Forex markup. That is, when I go abroad and I want to buy something or do something, I use the Scapia card. Whatever the currency, it's multi-currency. I don't have to bother about it. So if it's a dirham, it will be dirham, dollar, euro, euro. So I can make in whichever currency I want. Usually I can make only in my currency or in the local currency. The app will ask, you want to make the payment in the local currency or you want to make in your home currency. I can choose. Suppose I'm making the payment in, let us say, Omani Riyals. Okay, then what happens now? It is a kind of, bill drawn by my bank, by Scapia, by Federal Bank, okay, which is drawn outside India. Okay, it is payable in it is drawn in foreign currency, but it is payable by me in Indian currency. So what Scapia will do is instantaneously they will take the currency exchange rate at that point in time and finish the transaction. So that Omani fellow will get his money straight away in Omani Riyal. For me, at that moment, the Omani Riyal will be transacted, converted into INR, and my account will be debited. Straight away. My account will be debited, my credit card account will be debited. Of course, I come back, then I take some time off, and then I pay. That is my arrangement with my bank. But basically, this is an example of foreign exchange. See, going beyond letters of credit, bills of exchange. Credit card is basically my banker. Okay, my banker is paying on my behalf. I have to pay to my bank later. Okay, but the transaction is not a local transaction. It is a Forex transaction. You might ask me, what's the big deal, sir? The big deal is there is a restriction on Forex transaction. There is no restriction on domestic transaction. On domestic, I can do anything I want. Forex, there's a limit. RBI has put a limit on what I can do. It's a comfortable limit. It's not that it's a big amount. It's not a small amount. It's a big amount. But there is a limit on what I can do in foreign currency. Right? Rutra Dhomane is asking, it is illegal to carry a currency of any country out of that current country. No, it is not. All countries permit you to take a certain limited amount out, including India. See, you can take up to $10,000 out of India. You can. INR also you can take. Equivalent INR you can take. Nothing wrong. Okay. Traveler's checks are no longer used, ma. See, why will I use a stupid traveler's check when I have a wonderful thing like Scapia? See, in those days when we were traveling abroad, I'm talking about really old, 15 years ago, almost first time when I traveled abroad, you know what we'll do? We'll go to the bank. From my SB account, he will take 10,000 bucks. And he'll give me traveler's checks, which I can take. So I will take it in denominations like 1,000 rupee denominations, I will take it. Then when I go to the foreign country, I will locate his branch in that foreign country, go present my traveler's checks. Then that bank will give me local currency. Are you able to understand? They'll give me local currency. So point is, I don't have to take the currency with me. I only take the traveler's check, which is safe. I go there and I exchange it. Whenever I want, I go. And they have outlets everywhere in all the places. And just go there, their own counterparty will do. All that is now gone. If you tell anybody that I'm taking traveler's check, they look at you. What are you doing like that? Moreover, there will be a charge for that traveler's check. For every amount, they'll charge 1 rupee, 0.10%, 1% like that. It is not a good idea. Not a good idea. It was there once upon a time. Now it has lost its thing. Letter of credit, I'm sure you know. I am an importer. I want to import goods. Then the foreign seller will say, I don't trust you. So you give me a guarantee from your bank that in case the goods are supplied, your bank will pay me. That is called letter of credit, LC, being given by the bank to the other bank, to the seller's bank. My bank will give a letter of credit. So the seller's bank will inform the seller that we have got the LC. Now you supply. So based on the LC, he will supply. So even if tomorrow I don't pay, my bank will pay. It has to pay. So this is a kind of guarantee. The letter of credit will be expressed in foreign currency. Am I correct? Even if it is expressed in Indian currency, it will be payable in foreign currency. Are you able to understand? Wherever there is a cross-border, cross-currency involvement, foreign exchange. Now, since the word foreign security needs to be understood, the word security has to be understood. I am not going to waste my time teaching security to you because you have already studied it. The word security has already been defined for you. Okay? So don't waste our time on this. Basically, when the security is expressed in Indian currency, it is a security. But when it is expressed in foreign currency, denominator are expressed in foreign currency, we call it foreign security. When it is denominator are expressed in foreign currency. Okay. Person definition is there. In all enactments, there will be a definition of person. Here, person includes an individual, Hindu undivided family, company, firm, AOP or BOI, artificial judicial person. Last is very important. Any agency, office or branch owned or controlled by such person. So that is also a person. Meaning, maybe there is a company abroad. That company has a branch in India. For FEMA alone, you will not find this seventh item in Companies Act or income tax. FEMA alone. So the foreign company has a branch in India. No? That branch is a person. Okay. Why the word person is defined? Because I'm going to define the next definition I'm going to give you is very, very important from the exam point of view and from knowledge point of view. Person resident in India. Okay. Now, the FEMA will apply to PRIA in one way, PROI in another way. PRIA means person resident in India. PROI means person resident outside India. PROI definition, easy. PROI definition, easy. 2 minutes over. PROI means a person who is not resident in India. That's all. So if you are not a PRIA, you are a PROI. So you are begging the question again, as you know, in the Companies Act. If you are not PRIA, then you are PROI. Got it? So you will have to ask me, sir, how will I know whether I'm PRIA? That definition is very important. 2 subsection 5. It is a little complex definition. Let me assure you, the discussion in the institute material is beautiful. I know the professor who took the time she took a lot of time to draft that part, and she did a lot of research and understanding, and it has been drafted very beautifully. Please read it. All I am going to do is explain to you. Okay, but read the institute material also. It's very nice on this point. A lot of effort has been taken to ensure that this complex definition is simplified and given to you. Okay. Basically, the person resident in India definition is linked to staying in India, residing in India. Just like the Income Tax Act, here also they say a person residing in India for more than 182 days during the course of the preceding financial year. So the minute I'll ask you, only first question I'll ask you, have you resided in India for more than 182 days? So 182 days allowed. 183, more than 182 days, if you are residing during the preceding financial year. Financial year, you know. What is the financial year? The year beginning on the 1st of April and ending on the 31st of March. Year beginning on the 1st of April and ending on the 31st of March. Okay. Now, so for example, if I am deciding whether I am a person resident in India for the current year, You have to ask me, how many days did you stay in the last year? So if I say I stayed for more than 182 days, straight away you can say I am a person resident in India. But before that, you have to ask me one question. You have to ask me a question. Did you go out of India, sir, or stay outside India during the last financial year? For what? For one of the three purposes. For example, for or on taking up employment outside India, or for carrying on outside India any business or vocation, or for any other purpose in such circumstances as would indicate his intention to stay outside India for an uncertain period. So please understand, does not include. So I am telling you, sir, did you stay in India for more than 182 days in the last year? Yes. Then, sir, did you go out of India? Yes, sir. It so happens I did go out of India many, many times. I went out of India 4 times. Okay. But was it for taking up employment outside India? No, 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 no. I went as a tourist. Was it for carrying on any business or vacation? No, 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 no. As I told you, I went to see those countries and I came back. Did you go for any other purpose as would indicate my intention to stay outside India for an uncertain period? No way. Every country that gave the visa gave me a limit. Beyond that, if I stay, they will arrest me and send me back. So clearly, I am a PRII because though I went out of India, it was not for one of the three purposes. Right. Now, another example. There is a gentleman. There is a gentleman who stays in India for more than 182 days during the last financial year, 23 March. In February 23, sometime in February 23, our man decided to go to Dubai. Not like me for enjoying, but to go to Dubai for a job. So he went outside India for or on taking up employment outside India. He went on February 25th. Now, even though he stayed in India for more than 182 days during the preceding financial year, because he went out of India during that year for taking up employment, one of the three purposes, he is not a PRII. Are you able to understand? Person residing in India for more than 182 days, okay, during the course of the preceding financial, but does not include, got it? Right? Does not include. Okay. So the point is if somebody goes abroad for employment, even though he stayed in India for 182 days, see, you are in Dubai for 5 years. During that 5 years, you are a person resident outside India, no? Because you see, first year when you left, 5 years you went. First year when you left, what would have happened, Srinivasan? 182 days you would have stayed in India, then you would have gone. But even though you went in February, March, October, it doesn't matter. That year, from October 30, whenever you went to Dubai for employment, from that day onwards, you are a person resident outside India. You might ask me, how is it going to matter? It matters, sir, because PRIA can do certain things, PROI can do certain things. So it depends on who you are. This becomes very important. Okay. Now, the reverse is also there. There is a person residing in India for more than 182 days. Your question will be, did he come to India? Did he come to India for or on taking up employment? Then, even though he has not stayed in India for more than 182 days, even though he has not stayed, if he comes to India for or on taking up employment, or for carrying on business, or for any other purpose as would indicate his intention to stay in India for an uncertain period, then automatically such a person would become a PRII, though he has not stayed in India for more than 182 days. Though he has not stayed, he still, from the day he enters India for employment, from that day he will become PRII. Provided he comes for one of the three purposes. Otherwise, he won't. Again, a reverse side, tourists coming into India will not be considered. Okay. So again, his intention will be there for a thing. He has to come for an uncertain period. For example, what Rupesh Mamani, you are put including leaves. I don't know what you mean by that. Correct. gone out of India, that is leaves, or comes to India. What is your question? Here you want to put leaves, is it? I don't know. Rupesh Bimani, kindly clarify. See, sir, beyond the Indian coastal waters, if this fellow is going, he is not in India, sir. So I don't know what he does. My question is, did you reside in India for more than 182 days? If you show me that you are not in India for more than 182 days, you stay in the water, you stay on the water, you stay in the water, where is my problem? Okay. So long as you didn't stay in India for more than 182 days. Go. Okay. Not my problem. But again, such a person may come to India. We will take it up later in a different way. Your Navy officer example, we will, in the Institute Board of Studies material, there's a problem. I will discuss that problem when we will link it with your Navy officer, and I will tell you what happens. So your question is not Navy officer who stays out of India for more than 182 days, straight away PROI. No doubt about it. Because he went out of India, he goes out of India, he stays out of India for more than 182 days. Okay. Are you able to understand? And he is definitely a PROI. Are you able to understand? He is definitely a PROI. No doubt about it. Okay. Your question is, when he comes back, what happens? Or when he keeps coming and going, what happens? Okay. Uncertain means that he is not clear that he will leave on your date. Uncertainty is medical emergencies. Why only medical emergency? Any other uncertainty? I don't know when I will go. I've come. I don't know. Then uncertain period. So if he's come to India, see the second part is, even though he has not stayed for more than 182 days, if he comes to India for one of the three purposes, he will become a person resident in India. So this individual definition is a little complicated. So we will understand it better using a, diagram also, which is there. So this is the thing. We have already seen this, so I'm not going to waste your time on this. So where he goes out of India for the three purposes, he will be a PROI, even if he stay outside in India is for more than 1 days. On the other hand, a person who comes to India for three purposes becomes a resident, whether his stay exceeds 182 days or not. See, but exception, a person who comes to India as a tourist for other reasons where his stay is for a period which is certain, will not be considered as a resident, even if his stay in India is more than 182 days. So long as he doesn't come for the three purposes, he is coming only as a tourist. This is an exception given. Okay, because he has not come for the, even though he stays in India for more than 182 days. Okay. Yeah, all these points always connected to the immediately preceding financial year. I don't want to use the word relevant previous year because, yeah, technically they are the same period, but relevant previous year is used in income tax. Here we do not use the word previous year, we use the word preceding financial year. You might ask me how important is it? I would humbly suggest it is important, madam. When you are writing an answer, don't write previous year, please write preceding financial year. If you can kindly I humbly entreat you, okay, to accept my words and do what I say, rather than use a wording which is not wrong in the sense the word previous year is used in income tax, but in this context, do not use it. But technically, you are right. Relevant previous year only we are talking. I'm now sitting in 23, 24 FINA. Now you will get into assessment year. So that word can never be used here. So I am now in 23, 24 financial year. Am I correct? I am now in 23, 24 financial year. So for this purpose, I have to see the immediately preceding financial year 22, 23. That is all. See, if you are an Indian resident, Indian citizen, working in an embassy outside India, please check out. Did you stay in India for more than 182 days? Yes. Did you leave India for taking up that employment? Yes. Then you are a PROI. Were you always in America on your employment? For the last year, you never came to India, or you came to India, but totally not for more than 182 days, or you came to India, but you didn't come for employment. Your employment is in US. So this is you are a PROI. Okay, PROI. One more thing. Citizenship has nothing to do with residence. You may be a citizen of India, but you can be a PRY, person resident outside India. Like our friend Mr. Srinivasan himself, being a citizen of India, so long as he was in Dubai for 5 years, he would continue to be a citizen of India, I assume. Because Dubai, I don't think you can become a citizen. Okay, they want one or two people. For example, Lulu owner only for after law, they have given him a honorary citizenship. Otherwise, I don't think the emirs are interested in giving anybody citizenship. Or else you have to invest or 100 million or something, or 1 million something, the gold card, platinum card they give you. But even then, the citizenship, they don't give it. They give you 10-year open visa and 20 years open visa. They say come and go. But citizenship, they don't give. Only our friends in the US and Canada, they give you, Australia, they give you citizenships. After you proved your, loyalty to these countries, they give you. The point is, even though you are a citizen of India, you will be a PRY, person resident outside India. Citizenship has nothing to do with residence. Why we are reading this definition? Because under FEMA, the rules are different for PRIA and PRY. Unless you decide whether he is a PRIA or PRY, you cannot apply the law to him. If you want to apply this law, you have to find out whether it's a PRIA or PRY. Friend, why did you read Section 7 of the Income Tax Act? At that time, you ask the income tax professor, why did you study? Because the tax rate for an NRI is different from a tax rate for a resident. So, unless you know whether it's a non-resident or a resident, how will they apply? Certain sections are applicable to Indians, certain sections are applicable to non-residents. Are applicable to residents, others are applicable only to non-residents. So, I need to find out whether it's a resident or non-resident first. So, just like you read Section 7 in the Income Tax Act, you have to read the section. If you don't like it, what can I do, Ruturaj? Sorry. Okay. And one more reason, it will be asked in the exam. At that time, if you tell Srikanth, I asked him, you didn't give me a proper reply. Therefore, I'm not going to study it. What can I do? You tell me. Don't do it. Of course, it seems very complicated and boring. I agree with you. But see, I'll tell you, many times people will come to my office for advice on foreign exchange management act. First thing I have to do is, before talking, I will tell them, please give me your passport for the last 3 years. Or two or one passport or two passports you give me. Some of them have two passports. Then meticulously I will go through that. I won't go through. My assistant will first go through, take a copy. Even before he comes, we'll ask him to send a scanned image and we will prepare a chart and find out whether he is a PRIA or PRY. Then only he enters my cabinet for advice. Because unless I know he is a PRIA or PRY, how can I advise him? You tell me. If you can do that, you are really great. What do you say, Rudraj? You understood? Have you understood the reason why you are studying this definition? Can I take it that you have understood? See, understanding is one thing, accepting is another. I just want to know if you have understood. Okay. Why should it not be possible? I always believe in justifying something before teaching it. Sure. Okay. Now, same concept, I'm just using this chart. This chart is very much there in Board of Studies material. Beautifully prepared, excellent chart. Summarizing the whole concept in a nice flowchart. Okay. So you call that gentleman or lady, ask one question. During the relevant previous year, see, they are using, the institute using relevant previous year. I would strongly advise not to do it. During the preceding financial year, did he reside in India or she reside in India for more than 182 days? 182 days. Yes. Yes. Then let's first explore yes. Then we'll explore no. Am I correct? So in a flowchart, at one point there is a decision. The decision can have only two nodes. One node can have only two outlets. Yes or no. So first we go to yes. He says yes. Then you ask him, did you go out or stay outside India during the current year? If he says yes, then was it for the three purposes? No. See, point is going out happens in the current year. So he stayed in India for more than 182 days during the previous year or visiting year. during the current year, for which we are finding out he left India. Is it 3 years? Three purposes? Yes. Then straight away PROI. No. Then PRIA. In case he says, did you go out of India? No. Then straight away PRIA. Did not go out at all. 365 days he stayed here only. Then straight away PRIA. This is a straight case. 182 days in India, more than 180 days, completely in India, never went out. Another case, he went out, but not for the three purposes. Continues to be PRIA. Like me, for example. He went out, but for one of the three purposes, then he becomes a PROA. Even though he resided in India during the immediately preceding financial year for more than 182 days, still, because he went outside India during the current year, for the three purposes, he becomes a PROI. Are you able to understand this? Now, he says, did you stay in India for more than 182 days? No. Then, did he come to India? See, this is a guy who did not stay for more than 182 days. Suppose there is a foreigner who came to India and he stayed in India for more than 182 days, right? And it is for one of the three purposes, then straight away he'll become a... See, if he comes to India, he's a foreigner, he didn't stay in India for more than 182 days, right? Then you ask him, no, you didn't stay, okay. Did you come to India during the current year, that is, during the year where I'm seeing? Yeah, I did come. Was it for the three purposes? Yes. Then, even though that person has not stayed for more than 182 days, he or she will become PRIA. If they say, yeah, I came, but it was not for the three purposes, like I came as a tourist and all, then this category. See, this one difference is, suppose you come to India, but not for one of the three purposes, like a tourist and all, then on it, PROI stayed away. Okay. Then lastly, you have person who comes to India during the current year. Okay. Did he stay in India for more than 1 days? No. Did he come to or stay in India during the current year? No. Then stayed away, PROI. Stayed away, PROI. Okay. So these are the three categories of, these are the broad categories of people who would be covered. See, you also have to be very careful only when this guy comes in or goes out during the current year, you have to be very careful. Otherwise, you can easily finish it off. Okay. One more thing, being a student is not one of the three purposes. Being a student, if you're going for education abroad, not one of the three purposes. Okay. Not one of the three purposes. Student visas are given very clearly with specific duration. Thereafter, you get another 1 month's grace for you to get a job and get a visa. Even then, you have to go back and come on the new visa. Okay. So, student is not covered for information. Okay. See, I'll tell you, the earlier law was very clear with regard to residence. Somehow, the new law, they have confused it a little in terms of come to India, going out of India. Right? On the whole, this is the whole thing. They want to be sure that when a person leaves India for employment in the current year, irrespective of whether they stayed for 182 days or not, they become PROA straight away. Got it? When he goes out of India, not for the three purposes, and he stayed for more than 182 days, he's a PRIA. This is the understanding. If he go outside India for three purposes during proceeding, it doesn't matter. For the purpose of going out and coming, we have to consider only the current year. So, if he went out for the last year, then for calculating, finding out his PRIA, PROI for that year, you have to see the year before. For example, we are now in 23-24. You are saying that he went out of India for one of the three purposes during the preceding year. Agreed. Then you ask him, did you stay in India during 21-22 for more than 182 days? He says yes or no. It doesn't matter. The minute you say he left India during the previous year, during the current year, for that year, then For that year, he will become PRY. For that year, he will become PRY. Okay. This is the concept. And current year, you have to again see. Person resident outside India means a person who is not a resident of India. Citizenship is not relevant for determining status under FEMA. See, this chart has been created after much effort by the institute. Believe me, I know how much effort they took for this to arrive at this logic. Many consultants were consulted. Many of us, including me, many consultants were consulted. We all gave our views, and finally, Board of Studies has given a clear chart on PRIA. Where a person comes to India for one of the three purposes, he will be considered a PRIA from the date of arrival in India. Okay. Before that, he will be a PRI. So any act done by him before that date, he will be governed by PRY provision. After that, he will be governed by PRIA provision. So here are some examples. A bit old, no doubt. Changing date is not a big deal. The principle is more important. Law has not changed. Law continues to be the same. Mr. Ram had resided in India during the financial year 2018-19 for less than 183 days. He again came to India on 1st May 2019. So, in India, he resided for less than 183 days during 18-19. Okay. He resided in India for 2019 March for less than 183 days. He came to India on 1st May 2019 for higher studies and business and stayed up to 15th July 2020. He stayed up to 15th July 2020. So, please note, this is 1st May 2019, 15th July 2020. State what is examine Ram's residential status for 1920 and 2021. Okay. So, 1920, he didn't stay in India for more than 182 days. Did he during the immediate previous year, that is 1819, did he stay for more than 183 days? No. Did he come to India, stay in India during the current year? Yes. Yes. During the current year, he enters India on 1st May. 1st May. So May, June, July, August, September, October, November, December, January, February, March. 11 months. Definitely, he came to India. And for what purpose? Two purposes. One, higher studies. Second, business. Business is one of the three purposes. So, did you come to India during the current year, that is 1920? Yes. Was it for one of the three purposes? Yes. Then he becomes a PRIA. Okay? PRIA. Person resident in India. Mr. Ram is PRIA as word business is included. Correct. Absolutely correct. So, for 1920, he is PRIA. For 2021, what happens? You have to ask again. For 2021, you have to ask. See, he stayed up to 15th July. The problem is, we don't know when he left, for what purpose he left. So, your question is, for 2021, during 1920, he stayed for how many days? 365 minus 30 days. Almost 335 days he has stayed in India. Definitely more than 182 days. He stayed during 1920. So, question, during the relevant previous year, did you reside in India for more than, during the immediately preceding financial year, did you reside in India for more than 180 days? We are now talking about, we are deciding for 2021. For that, we are asking 1920. Answer is yes. Then, did you go out or stay outside India during the current year? That is 2021. Yeah, he went out on 15th July. Now question, in that year, in 2021, when you went out, in 2021, current year? Was it for one of the three purposes? I don't know. That is the answer. So I shall presume that he didn't go for the three purposes, in which case for 2021, he continues to be PRII. Okay. So both for 1920 and 2021, our man continues to be PRII. Okay. This is the correct answer. Now Ram is over. Jai Shri Ram. Now Krishnan. Krishnan resided in India. Now from Ayodhya, we have to go to Mathura. So Mr. Kishan resided in India during the financial year 1819. See, Hemalata ji, 2021, why he is not PRY, you have understood now. If only you tell me that when he went on 15th July, he went for one of the three purposes. If only you tell me, I will agree with you that is PRY. But I don't know. I can't presume that he went out for one of the three purposes. Are you able to understand? Okay, if you want to write PRY in the exam, you can. But what you should write is, it is assumed or it is presumed that when he left India on 15th July or 16th July 2020, he went abroad for taking up for one of the three purposes. If you write that, then you are right, PRY. But if I will write like this, I will say, as information is not provided regarding purpose of leaving India on 15th July, after 15th July, it is assumed that he has not left India for one of the three purposes, in which case, having stayed in India during the immediately preceding financial year for more than 182 days, he will be treated as a PRII for 2021 also. If you write an answer like this, nobody can reduce marks. Either your answer or my answer. Both will right. Because the question is ambiguous regarding why he left India after 15th July 2020. Okay. Mr. Kishan resided in India during the financial year 1819. He left India on 1st August 2019 for United States of America for pursuing higher studies for 3 years. So 1819, he was here. On 1st August 19, that is 1920, he goes for pursuing higher studies. What would be his residential status during the financial year 1920? 1920 stayed away PRII. Why? Because you stayed for more than 182 days and you went abroad for what? For pursuing higher studies. Am I correct? So that will not be counted as one of the three purposes, right? But during 2021, what happens? He left India on 1st August 2019. So let us, and if we don't have any information regarding coming back and all. So right from 1st August 2019 to 31/3/2020, he was not there. So which means April, May, June, July. April 30, May 31, 61, June 30, 91, July 31, so 122. For he was in India for only 122 days. After that, he was abroad. So 365 minus 122 will be more than 182. Therefore, am I correct? 365, we have to calculate because we can't play games like that. 365 minus 364 or 365. We are talking about 31/3/2020. Leap year, no? No. Leap year, na? 31/3/2020, na? Sorry. 365 minus 122. 243 days. So I am safe. 243 days he stayed outside India. More than 182. Less than 182 days he stayed in India. He went abroad. But that's okay. Okay, he was in 2021, right? He was abroad. During the preceding year, he was outside India for more than 182 days. So for 1920 and 2021, 1920 he'll be PRII, 2021 he'll become PRY. Okay. Let's see what Rudraj says. Mr. Kishan is PRII for 1920. But for 2021, he will become PRY. Let's see. Rudraj again writes for Kishan, Mr. Kishan is PRA for 1920, etc., etc. If he does not come back in India, then he will be PRY for 2020. Absolutely correct. Rudraj, your answer is correct. Okay. For 1920, he'll be PRIA, 2021 PRY. Which is better, whether to be a PRIA or PRY? Sir, under FEMA, it is better to be PRIA, sir, because there are a lot of restrictions on PRY. Whereas PRIA can do many things. So FEMA is favorable to PRIA than to PRY. Unlike income tax, where, if you are an NRI, you won't be taxed and all that. Here, reverse. FEMA is comfortable for PRI. PRY is banned from doing many things. Okay. Of course, if you are a OCI or a person of Indian origin, you have certain liberties, etc. But generally, PRY better not to be. Again, there's no absolute answer that always PRY is not good like that. 1920 stayed in him. He stayed in India for more than 182 days during 1819. And he left India on 1st August for studies, not for one of the three purposes. Studies is not one of the three purposes. Okay. Miss Alia, or whatever, is an air hostess with the British Airways. Wow. She flies for 12 days in a month and thereafter takes a break for 18 days. I love that job, yeah. I wish I can't be an air hostess. I'm saying, what a job. 12 days you work, 18 days relax. During the break, she is accommodated in base, which is normally the city where you're, but here, for security reasons, she was based in Mumbai. So she was accommodated at Mumbai for more than 182 days. What will be her residential status? The same thing as applicable to Navy officer. Same link here. The answer is Alia is a person resident outside India because she has come to India. She has stayed in India for more than 182 days. Agreed. Okay. But she did not come to India during the current year for or on taking up employment. She only came for in the course of her employment. So her residential status under FEMA will continue to be PRY. Okay. That is the answer. Same thing will apply to Navy officers also. You have to distinguish between residing and staying. She did not reside in India for more than 182 days. She stayed. Stay is different from residing. Residing is when you maintain a permanent residence. When you have a permanent residence, it's residing. Stay is where you just come and go, stay. So your Navy officers also will come under this category. They will continue to be PRY. Okay. Now, one more. Now, I'll have to cover one more topic before we proceed. So, we have seen individuals. Individuals are over. Now, other than individuals, any person or body corporate registered or incorporated in India is a PRIA. So, LLP in India, PRIA. Company, India, PRIA. Firm registered or formed in India, PRIA. Person or body corporate registered or incorporated in India, right? An office, branch, or agency in India owned or controlled by a person resident outside India is a PRIA. So you are a citizen of Australia. You reside in Australia, you are a PRY. Okay, but you have a branch or an agency or an office in India. Then if you are owning and controlling it, then even though you are a PRY, the branch or agency in India owned by you is a PRII. The rules applicable to PRII will apply to this. Okay. Yeah, I cannot become an air hostess. I totally agree with that. Okay. But there are nowadays, it's not just women. Even men are allowed to become air hostess or air host. So, anyway. So, an office, branch, or agency outside India owned or controlled by a person resident in India. Reverse. The branch or agency is outside India, but it is owned or controlled by a person resident in India. Because of the association with the PRII, that foreign branch, etc., will become PRII. Because of presence in India, even though it is owned or controlled by a person outside India, this local branch will become PRII. So, Very important. In case of Miss Alia, they have not given 180 days is for preceding year or not. Also, not provided that she had come back to India. I'm not see this. The point is, in India she stays for more than 182 days. So will she be a okay for the sake of clarity? Let us say you are talking about the next year, ma. So let us say for sake of clarity, 22 March, 22. I'm sorry, 23 March. That one for 22, 23. She came on and off. So together she stayed for more than 180 days. Together she stayed for more than 180 days. Okay. Then will she be considered a PRA? No. What they are trying to say is, even though this number is 182, it should not be considered because she did not reside in India. She only came and went stayed. Also, she didn't come for or on taking up employment. He only came in the course of employment. Therefore, even though she stayed for more than 182 days during the relevant previous year, as we call it, still she would be a PROI. Okay. Exactly. We have also given here. Can you see this? Where a person comes to India for one of the three purposes, they will be considered PRIA only from the date of arrival in India. Okay, the date and not so the date of arrival in India. Similarly, when you leave India, date of leaving will become important. Only from that day it will change. In third point, whether the branch or the branch will become PRIA. An office, branch, or agency will be PRIA if it is in India, even though it is owned or controlled by a PRI. So this person will continue to be PROI only. It is only this branch which will become a PRIA. Okay. Now look at the Printex Computer is a Singapore-based company having several business units all over the world. It has a unit for manufacturing computer printers with its headquarters in Pune. It has a branch in Dubai, which is controlled by the headquarters in Pune. Are you able to understand? Singapore-based company. It has units all over the world. It has a unit for manufacturing computer printers. And the computer printer manufacturing division has its headquarters in Pune. So that computer printer division is a branch in India, which is controlled by Singapore. PRY, Printex Computer is a PRY. So the Pune branch or Pune unit is controlled by Singapore, PRY, Printex Computer Singapore's PRY. It is the Pune unit is a PRII by definition. Are you agreeing with me? Pune unit is falling within the definition of 3. Pune unit is falling within the definition of 3. Pune unit is straight away coming under 3. Okay. An office or branch or agency in India, that is Pune, owned or controlled by a PRY, Printex Computer Singapore, PRIA. Agreed? If you agree with that, then look at the Dubai branch. Now, the Dubai branch is controlled by Pune, which is a PRIA. So, Dubai branch will come under 4th category. An office or branch or agency outside India, that is Dubai, owned or controlled by a PRIA, that is the Pune unit. Therefore, both Pune unit and the Dubai branch are PRIA. Got it? Are you clear? This is a popular question. Be prepared for this type of question in the exam. See, my view, I may be wrong, but I'll tell you, this is the first time they are putting FEMA into the syllabus. So they will also tread carefully. So they may not go too deep or thing. Ankur Patel, both are PIRIA. You have corrected yourself. Good, thank you. Now, so Printex and all is a standard question. It has come 3 times. And this type of question is a standard question. Has come at least 2 times. 2 or 3. I've taken it only from your this thing. So my humble request is be prepared for a similar question. Be prepared. If you have some questions in the institute, exam, all those questions which are given in the test questions now, test your knowledge, read it thoroughly. Just a suggestion. One of those will become, so it's up to you. Like with 3 marks, 4 marks, enjoy. There's only a suggestion. If it doesn't come, you don't go and file a suit on me. I'm just telling you, if you want, be prepared. It's up to you. Take it or leave it. Because in those days, these were repeat questions for final. Now they have pulled it out of final and pushed it into inter. So when the first time when it comes, no, they can't go to some vague area and ask you some question. For example, like section 3. See, section 3 is the charging section. Meaning, this is the section that prohibits. This is the section that clearly says, save as otherwise provided in this act, rules or regulations made thereunder. Very important. Save as otherwise provided. So if it is provided otherwise in this act, you can do it. Either in the act, rules or regulations. See, just for clarity, rules are made by central government. Regulations are made by Reserve Bank of India. All are important. So whatever it may be, if that says you can do, then if it is provided in the act, rules or regulations, or with the general or special permission of India. So save as otherwise provided, or with the general permission or special permission, no person shall deal in or transfer any foreign exchange or foreign security to any person not being an authorized person. Who is an authorized person? Bank. Sorry. Bank, money changer. These two guys are authorized. Money changers. Money changer, I'm sure you know, so many of you seem to have traveled abroad and you seem to be very well aware of all this. So, what I'm saying is, yeah, that's why I already told it in a low voice only. Okay, now it's up to you. Just an idea, thinking. See, sometimes I think like a student. What happens if this exam comes? I prepare. You create your own luck, okay, and go there. The point is, coming back to this point, who is an authorized person? Any bank, which is called an authorized dealer. There are designated branches of banks, which are AD, authorized dealer. Only those branches can buy and sell foreign exchange. So if you are banking with SBI, your branch may not be an AD. But in your city, say Pune, there will be 2 or 3 branches which are authorized dealers. They would be eligible to buy and sell foreign exchange. So your branch, what they will do, they will take your application, immediately process it and send it to the AD branch. The AD branch will authorize, and see, they will, your money will go, but it will only go through the AD. The authorized dealer branch only can do it. That authorized dealer branch will be licensed by the Reserve Bank of India. Similarly, there are money changers. That is, people who can buy and sell foreign exchange. Means you want to travel to US, you need dollars. So you have to go to the money changer, produce your passport, and then transfer the money from that account to his account, either by whatever method, and he will take it, and then he will either give you cash, the US dollar, or he might give you a traveler's check, or even debit cards are now, as rightly pointed out by my friend, good friend, Mr. Somebody was talking about debit cards. I saw that. Debit card, international debit cards. Janaki is telling ATM cards and all. There are many money changers and many banks. Sorry, not money changers. Many banks, instead of giving travelers checks, they give you debit cards. Okay, or as in my case, you have a Scapia and you take it and use the credit. See, idea is you use the credit, you circulate the money. See, for once I swipe in Dubai on the 1st of January, till 20th I have not paid. Only on the 12th of February I'm going to pay Federal Bank. For that almost 40 days, my money is with me. My money is my money, your money is my money. So I keep my money. And on the 11th or 10th, I will pay the amount. And that's all. This is kind of financial. You being chartered accountants, we can do it because we have the discipline to do it. Whereas non-CAs and non-finance people, no, they don't have discipline. Okay, so they can't do it. So credit card using by chartered accountant is different from credit card usage by non-CA or like you. You are also, see, according to me, people who have completed intermediate or doing articles and all, you are like house surgeons. You are also 3/4 doctor. So you should also be aware of all these things. That's why I prefer credit cards rather than debit cards. So why should I pay money? Why should I take my money and spend it? I will spend his money, then I'll pay it back to him. So long as my cash flows are there, I can do it. This is the philosophy. Because there are many people who say, no, Mr. Srikanth, don't use credit cards and all. I say, use it, but use it in a disciplined way. Enjoy. See, because money is lying in my bank account, now it will earn interest. It will save interest for me in my housing loan account. Which means, why should I pay now? I enjoy, swipe, come, earn, pay. Sorry, I mean, some of you may be highly financially disciplined people who don't believe in credit cards. I agree with you. But if you know how to handle the payment, exactly on the due date or one day before the due date, payment should go. Then you are safe. Okay. Save as otherwise is an English language word. I wish they had not used words like that. See, normally you cannot do these 4 things. Normally, listen to me, that way you will understand. Normally, you cannot do these 4 things. Normally. But if the act, rules, or regulations are allowing you, you can do it. Normally, you cannot do it. But if the act, rules, or regulations allow, you can do it. That's what save as otherwise provided. Save means except. Except. So, in a way, this save actually means except. I'm sorry. Except. Except. Save means except. Save doesn't mean saving you from danger. No, it means except. As otherwise provided. Means if the act says something differently, then these things can be done. But unless it is told like that, these 4 things cannot be done. Basically, dealing in foreign exchange, okay, without any person who is not. So, if your friend says, you give me 1 lakh cash, I will give you 20,000 equivalent dollar. Sorry, illegal transaction. You can only sell foreign exchange or buy foreign exchange to or from either a bank or a money changer. Money changers are registered money changers are there. I'm sorry, licensed money changers. Okay. Usually they are also there. Or suppose you are a foreigner. You are a foreigner. You are going to a handicraft shop, say Kaveri or Kairali, and you want to buy a rosewood elephant. So costing some huge $5,000, $10,000. No, you can pay in dollar, he can take in dollar. Because Kairali is a restricted money changer. So he can take your dollar, but he can't sell dollar to you. You cannot sell dollar to you. If you travel abroad, the same thing you will find in some supermarkets and places where if you don't have the local currency, they'll ask you, do you have dollar? If you just say, yeah, I have dollar, they'll accept dollar, but they will give change only in local currency. They can't give change in dollar. Because they are allowed to buy, but not to sell. Okay. That is called restricted money changes. Right. You cannot make any payment to or for the credit of any person resident outside India in any manner. See, your cousin is there in US. She tells you, you know what, you pay that money to that guy. Okay, I will give money to you when you come US. No. In fact, that is called hawala. Don't do that. You are not allowed to make any payment to or for the credit. Similarly, you cannot receive on behalf of anybody also. Anybody understand? Okay. So, like that. Yeah. And you are not allowed to enter into any financial transaction as consideration for or in association with acquisition or creation or transfer of a right to acquire any asset outside India by any person. It's called classic hawala, where here I am transferring rupee, there somebody is giving dollar. Okay, it's called hawala. Yeah, I'm sure you know hawala. I mean, you know what is hawala? So sorry. Hawala, where there is a local currency transaction backed by a foreign exchange transaction. Illegal, very much illegal. You can't do that. It's prohibited by section 3. Okay. Simple, sir. You are going abroad for some work or something. You want some money. You go there. Here you pay cash to somebody. That gentleman's friend comes and meets you in Boston and he gives you the dollar. Not a good idea. Okay. Where you are entering into a financial transaction in India, it is a consideration for a right to acquire any asset, including currency outside India by any person. Okay. Absolutely, Manish Kumarji. RBI doesn't only want to know, they know every pie of Forex which is coming in and going out, they monitor. Because it's a resource in there. Forex is an important resource, not just money, it's a resource. See, Forex is an asset. Okay. If you are an exporter, you are entitled to the INR value of that sale, but you are not entitled to the foreign exchange. The foreign exchange belongs to the Reserve Bank of India. You are only entitled to the INR equivalent. Always remember that. With all the liberalization, still there is a control on foreign exchange, as against certain countries where there is no control on foreign exchange. We call it full convertibility. In India, we don't have full convertibility. It is only partial convertibility. Current account transactions are freely permitted, whereas foreign capital account, there is still prohibition. Okay. Now, Section 4 says no Indian citizen, Indian resident can acquire, hold, own, possess, or transfer any foreign exchange or foreign security or immovable property abroad. That's what I said. You cannot acquire, hold, own, possess, or transfer any Forex, foreign security or immovable property abroad. Before doing that, you have to get permission from RBI, or there should be a general permission. There are some general permissions. We'll talk about that. But without the permission, save as otherwise, or with the general or special permission, you cannot acquire, hold, own. So you cannot say, Mr. Srikanth, I earned this money, hard money, earned money. Why can I not buy an estate in Shropshire in England and go and settle? Please go. But before that, get the approval of the Reserve Bank before taking the money out. Of course, one liberalization they have given is the liberalized remittance scheme, by which they allow you to take $200,000 every year if you want. They're given liberal permission. That's why it's called liberalized remittance. But before that, that was also not there. You have to be very, very, you can't take money just like that. Now, slowly they are testing the waters and seeing what will happen if they permit you to take money out of India. Now, important principle. Current account transactions are freely permitted unless specifically prohibited. So, what is a current account transaction? We'll see. Definition. Basically, I showed you now export, import, anything in the nature of trade, P&L item is current account. But capital account transactions are prohibited unless specifically permitted. Are you able to see the difference? Current account transactions are freely permitted. You don't have to ask any permission. You just go to the bank, authorized dealer, inform him. He will give you a form, form 15 CACB. You just fill it up. Tell him for what purpose it is. There are certain prohibited activities. So long as you don't do that, you are allowed to do anything you want. Are you able to understand what I'm saying? Yeah. You want to buy something. See, for example, recently I imported a set of for Shakespeare first edition. Very beautiful annotated Shakespeare first edition. I got it for 13,000 rupees. I got it from, I think somebody from Boston sent it. Fantastic. It was imported for me and bought. I paid for it. Allowed. It's a current account transaction. Why should I go and explain to why I need a Shakespeare for my library? I wanted it. Was a beautiful annotated Shakespeare which I wanted to read. So I said, I'll take it. So 3 volumes. Then I got it. I paid for it. I sent abroad and I got the money. Through my credit card, I paid for it. Transactions are freely permitted unless specifically prohibited. There are certain transactions which are specifically prohibited. We'll see what they are. From the exam point of view, these specifically prohibited transactions are very, very important. The specifically prohibited, you should know what they are because they will test you on this. Because when your client comes and tells you, I want to do this, you should be able to advise them, hey, Baba, you can't do that, man, like that. Then capital account transactions are prohibited. For example, you come and tell me, Mr. Srikanth, I want to buy an estate in Shropshire, England. Why? What is that? You got money in England? You go and buy. No. I want to take from my Indian account and take it out. Then I will only have to tell you, sir, your liberalized remittance scheme, 200,000, sir. You and your wife, $400,000, sir. Take it. Enjoy. In fact, when I tell that, they don't believe me also. Shrikant, can I take money? Shrikant, can I take money? I said, yes, you can take. Now it's allowed. Do I get permission from anybody? Nobody. Take it. So, but up to $400,000. If your estate in Shropshire is going to be more than that, sorry, I can't do anything about it. Okay. What I generally advise them in those cases is 200,000 in March. Then again, it's a one financial year ka limit, 200,000. So in March, you do 200, you and your wife, 400. Then again in April, you do another 200, 400. So totally, you will have 800 between you. You take it and do whatever you want with it. Enjoy. Go to Shropshire, buy the estate. A dollar, huh? $200,000. Equivalent rupees you calculate. There are people who have more. They want to take it out. So, in fact, there are many intelligent people. What they do every year, they take out 200,000 and they accumulate it in foreign country, US or UK or Canada, and then they buy a property or whatever they want. They do, and they live happily ever after. Okay. So now we move on to another important topic, which is called current account transaction. Will this act apply to Forex trading, currency exchanges? Yeah, freely permitted. Why? There's a limit to that you can go. Nothing wrong. If you buy, you are allowed to hold up to $5,000 in foreign currency. And if you are going to trade in foreign currency, you will be doing it through the RBI permitted route through an authorized broker who will ensure that your limit is not exceeded at any time. The holding limit should not be exceeded. Okay. Or you can open what is known as a resident foreign currency account, RFC. There you can hold your foreign currency in foreign currency. In cash, you can have $5,000. In the resident foreign currency account, you can have any amount. You can buy dollar and keep it, sell, and link it to your online, what is it, Forex trading thing, and enjoy. Nandavanam, Nandanavanam, Venkata Jagadish. You buy, sell dollar. When the dollar goes up, you go short. Then when it goes down, you go long. And then enjoy, go and enjoy. Make a lot of money in the Forex market. Okay. Current account transaction. What is it? Any transaction other than capital account transaction. Seriously. Now you have to find out what is capital account. We'll see that. But basically, I'll tell you, these are anything to do with foreign trade. See, they have given some examples. Without prejudice to the generality of the foregoing. Means what? Generally, any transaction which is not a capital account transaction is a current account transaction. So, generally stated, but within that broad general statement, they are giving some specific examples. For example, payments due in connection with foreign trade, other current business, services, and short-term banking and credit facilities in the ordinary course of business. So the minute it's happening in the ordinary course of business, please make the payment, including, suppose they're importing machinery. It is a trade payment, foreign trade payment. As far as the seller is concerned, it is a current account. Sale, you are importing, pay. Okay. Payments due as interest on loans and as net income from investments. So you made investments abroad, you're getting interest. Or somebody has given a loan to you. You have to give interest. Allowed. ECB, please pay. Okay. Remittances for living expenses of parents, spouses, and children residing abroad. Please send it. Okay. Expenses in connection with foreign travel, education, medical care. See, for your information, all these amounts, there is a limit. There, we are going to see that later, but subject to that limit, enjoy, take it out. Okay. Any person may sell or draw foreign exchange to or from an authorized person if such sale or drawal is a current account transaction. So you just have to go to the authorized person, tell them, bank, I want to send money. So, see, normally credit card transactions, ordinary payment in the course of, online payment, absolutely free. Now, bank even won't even disturb you. Okay. So only when you're making certain payments, they will ask you to, give a statement. Okay. Maybe it's 250,000. If it says so in the institute material, then I stand corrected. Okay, I stand corrected. Let me check up the material page 3.31, Mr. Shankaran. Definitely, I'll clarify. Okay, because when I last saw it was 200. If it has now become 250, great. Another 50,000. So 500, $1 million. March, 500. Another 500. Husband and wife, 250, 500. April 1, another 500, 1 million. Take it out. Enjoy. Live happily ever after. Okay. When somebody says, they want to take money out of India and go, I'm happy. Because such people, better they go abroad. They don't like this country, why are we here? And if they got some money, let us give it to them with our blessing and send them out. What do you say? See, before I continue, this is your Janani, Janma Bhumi. When Rama was in Sri Lanka, he conquered Sri Lanka, he was called Lankeshwar. And then of course, he sat, Vibhishan told him, you are Lankeshwar now. Immediately Rama said, no. At that time he said, this beautiful Lanka, which is golden, made of gold, Swarnamayi Lanka, Mena Rishyate. It is, I don't, Mena Gariyasi, because I don't like it. Because Janani Janma Bhumi. I want to go back to my Ayodhya, which is my Janani Janma Bhumi. This is that, sense of belongingness that Rama had. And he was whatever he say, was Maryada Purusha, whatever he said. That man said, I want to go back to my Janani Janma Bhumi. Whereas people are telling my Janani Janma Bhumi is useless. I want to stay in a foreign country. What is use of praising Rama, who said that he could have become king of Lanka. He did not have gone back to Ayodhya. And Vibhishan would have allowed him to be the Lankeshwar. Okay, but instead what Rama did, he made Vibhishan the king of Lanka and he went back to Ayodhya. Even though he knows he may not be the king in Ayodhya because Dasharatha has already told, no, Bharata will rule, you cannot rule. So, and he obeyed him. Such case, such a man, is a Janani Janma Bhumi. So that Janani Janma Bhumi is there. If somebody doesn't want to live in their own Janani Janma Bhumi, let them go back, Let them go wherever they want in the world. We don't care about them is the humble point that I will make here. I know. So the emotional statement I'm making, see, we are telling Ram Janma Bhumi, all Janma Bhumi, you are telling your own Janma Bhumi, you are not willing to stay, you want to go to some other place. What Ram Janma Bhumi for you? Okay. So think about it, is all I'm telling. That is why Ram Janmabhoomi is so important for Rama himself. He wants to go back. From Lanka, he came back all the way back to Janmabhoomi. Okay. So for your information, nothing to do with, that's why sometimes I get very irritated with people who go abroad. Where is actually Ram born? I don't know, Muhammad. Seriously, we don't know. It's a good question. Was he really born in Ayodhya? We don't know. It's a story which we tell and we believe in. And that Ram went back to Ayodhya from Lanka. Okay. Good. Very politically charged question from Muhammad. I don't want to answer. Where is actually Ram born? I don't know. Nobody informed me. Nobody knows. Even I doubt if Valmiki himself will know exactly where Ram was born. Okay. Broadly speaking, he was born in Ayodhya like that. Krishna was born in Mathura. Like that we have belief systems. Local belief systems. Okay, so local belief systems, but what happened like that? We have to believe in that, and we have to, by that belief is what keeps us going. Am I correct? No. So, any person may sell or draw foreign exchange to or from an authorized person if such sale or drawal is current account transaction, provided that the central government may, in public interest and in consultation with the Reserve Bank, impose such reasonable restrictions for current account transaction. What these reasonable restrictions are, we are going to see. Then the central government has in excess of this power issued the FEMA current account transaction rules. Right. So now we are going to see the prohibited current account transactions. Please understand, Schedule 1 of the current account transaction rules. Please note, this is rules formed by the central government. Foreign exchange management current account transaction rules has 3 schedules. Remember, 3 schedules. Schedule 1, read with Rule 3, deals with prohibited transactions. These transactions are prohibited. Similarly, Schedule 2 read with Rule 4 deals with those transactions which require prior approval of the Government of India, appropriate ministry. Lastly, Schedule 3, read with Rule 5, transactions which require RBI's prior approval, Reserve Bank of India ka prior approval. Quickly, we'll go through it. Some of them are relevant, some of them are not relevant. Let's not waste time. Today, with your permission, because of the nature of the topic, I'm not going to give you a break. Please bear with me and let's go through. So, remittance out of lottery winnings. Suppose you buy a lottery cheat in Kerala. If Mr. Robert comes to India, buys a lottery ticket in Kerala, he buys by fluke or chance, he wins it. He has to enjoy it in India only. He cannot take it to wherever he comes from. He cannot take it back to New York. Okay, remittance out of lottery winnings not allowed. Remittance of income from racing, riding, etc., or any other hobby cannot be taken abroad. You have to enjoy it in India. Remittance for purchase of lottery tickets, banned or proscribed magazines, football pools, sweepstakes, and all. See, one of my relatives was staying in Ireland. In Ireland, there is something called a sweepstake football, where they give you a sheet of paper and ask you to predict the winning teams in the football match. It's called football pool, where you put, say, €1 or €2, and then you predict. In case your prediction comes out correctly, where you put €1, you'll get €5. So, pure game of chance, where this gentleman will be used to enjoy when he was in Ireland. Then when he comes back to India, he says he still wants to play. Sorry, he cannot send money. Not for that. Never allowed. You cannot say, no. When I buy the lottery ticket and I get the first prize jackpot, I will bring it back to India only. Sorry, we don't want you to take money out for such remittances. Payment of commission on exports made towards equity investment in joint ventures, wholly owned subsidiaries abroad. See, payment of commission is not prohibited. If you have an agent abroad who is procuring export business, please pay him commission. But when you have your own joint venture or wholly owned subsidiary abroad, okay, and because we permitted you to take your money for that, you agreed to export. Because we permitted you to take money out and establish a joint venture or WOS, you committed yourself to export. And now you are exporting. On those exports, we will not permit you to pay commission. Because after all, you are having a joint venture or wholly owned subsidiary. Why do you need an agent? He gave you money only to set up JV or WOS. Why you are again asking to pay agency commission? Not allowed. Similarly, where a company has taken, foreign direct investment, or it's going to make payment for, it's going to make a payment for, some foreign collaboration, So for the purpose of royalty or for acquiring the know-how, we would have paid some money. When you pay that money, you would have agreed. Now you allow me to pay this money to them. Once we get the foreign know-how, we will manufacture and export. In case I do not export, then on that investment, I will not pay dividend. So when I'm getting FDI, at that time, when I'm getting a foreign collaboration, at that time I'm telling, because I'm taking foreign money, I will ensure that I export. So I will say, I will export 5 times my dividend, 10 times my dividend. If that export is not done, then the corresponding dividend cannot be payable to the foreign investor. This is called dividend balancing. So where dividend balancing is applicable, you cannot make remittance. See, these are all reasonable restrictions. There is nothing prohibitory here. See, suppose you are a business and you are importing raw materials, there is no restriction. Pay anything you want. Or if you are a business and you are hiring a foreign consultant and you want to pay him fees, no problem. Only thing is, Income Tax Act, you should ensure that whatever money you are paying him, if any TDS is deductible, you have to deduct and pay. For that 15 CB, they will ask you to give a certificate, whether any TDS is deductible. That also, when you are paying for goods, absolutely no, only 15 CA. If you are paying for services, they will want to know, is this a service that is applicable? Like, for example, royalty, technical know-how fees, am I correct? Management consulting services, you have to deduct tax and stamp. That is all. Otherwise, you pay any amount you want. Nobody is prohibiting you. There is no limit also. Any amount you want. Payment of commission on exports under rupee state credit rule is a very old scheme. It is not there now, but where they allowed you to borrow in rupee, see, and they allowed you to pay commission on that. Okay, but they don't allow you to pay commission on when you are exporting through rupee state credit route, but you can pay only up to 10% of invoice value of exports of tea and tobacco. Okay, on tea and tobacco you are allowed to pay 10%. Other than that, no commission. Similarly, payment related to callback services, meaning you phone up your number, some lady will talk to you for a long time, you enjoy and bid. For that, the payment will have to be made in dollar. Now you can't pay. In fact, you try to use that, you dial that number, and if you put your credit card now, immediately your card agency or your banker will immediately send a message saying, this is a prohibited service, please do not attempt to make remittance. Immediately they'll send you a message that you're not allowed to do that. Finally, there are certain deposits called NRSR, that is non-resident special rupee scheme, where NRI invests in India, he gets a higher rate of interest, but he cannot take it out of India. He cannot take the amount out of India. Interest also cannot be taken out of India. Taking out of India means repatriation. Repatriation is not permitted. When you take money out of the country, it is called repatriation. Okay, when you invest in India and they want to take it out, it is called repatriation. Repatriation is not allowed where it is an NRSR scheme, right? Now, we move on to Schedule 2, which is for certain matters, if you want to take money, pay foreign exchange, you have to get permission from the government of India, appropriate ministry. So you need to remember what is the purpose and what is the ministry. For example, you are a senior actress. You want to have a cultural tour, dance tour in Malaysia, Singapore. You want to make payment for that. Then you have to get the permission from the Ministry of HRD. Or you want to give an advertisement in print media. Okay, then you have to get that permission from the Ministry of Finance. Okay, exception, promotion of tourism, foreign investments, and international bidding exceeding $10,000 by a state government and its public sector undertakings. So the minute you want to give an advertisement in print media, you have to get permission from the Ministry of Finance, foreign print media. Exception is a government company, there is a state government or public sector undertaking, only for the purpose of tourism, foreign investment, and international bidding. Okay, so when a state government or public sector undertaking is bidding, then they don't have to get permission. But other than that, if you want to give advertisement in foreign print media, you have to take permission. Remittance of freight of vessel chartered by PSU, where a public sector undertaking is charting a vessel and they want to pay the freight, they have to get permission from the Ministry of Surface Transport. Payment of import through ocean transport by a government department or a PSU on CIF basis. Okay, only government department or PSU has to get permission from Ministry of Surface Transport. Multimodal transport operators making remittance to their agents abroad. See, goods are moving from one country to another country. Now, this is facilitated by people called logistics people. This is facilitated by freight forwarders. Nowadays, they don't use the word freight forwarder, which is old-fashioned. Now they call themselves multimodal transport operator. So what is this job? The goods will be loaded in the ship in some country now. It will come all the way to India, to the Bombay port. From there, this multimodal operator will remove it from the ship, put it in lorry, and take it to the factory. Similarly, export goods. He will take it from the factory, stuff it in the container, put it in lorry, and take it all the way to the port, load it onto the ship, ensure that it leaves. This entire job is called multimodal transport operator. Usually what happens now, a ship will be chartered in a foreign country. The container will be sold by this local guy. Okay, obviously he doesn't have a link with the ship owner. He needs an agent to whom he has to share commission. So he has to send money to that. Suppose he has an agent in Dubai. So this guy will be, the Dubai will be principal, I'll be agent, or I'll be agent. It depends on the transaction. So what I will do, I have to pay him some share of my income now. For doing that, I should get myself registered with the Director General of Shipping. Without the registration, I cannot make payment to agents abroad for multimodal transport operator. Okay. Then, suppose you are a TV station, television channel, or an ISP, internet service provider, and you want to hire a transponder for transferring data, or then for TV channels, you have to go to Ministry of Information and Broadcasting. For ISP, you have to go to Ministry of Communication and Information Technology. How can trace that the foreign exchange is doing for this? Mohammed ji, if you are routing it through an authorized dealer, straight away the authorized dealer will prohibit you. Just go and try it now. You go to any bank. From your bank account, you try to send a NEFT. The minute the bank application, the bank software sees you doing this, immediately they'll stop. Not only will they stop, you will get a call from the bank and they will ask you, why are you doing, what are you doing? So, very much closely monitored. If you're doing it through banking channels, authorized dealers will take care. Mohammed ji, if you're doing it outside the banking channel, nobody will know, but that is a crime. It is an offense and a crime, arrestable crime. How they will find out? If they find out, you are in trouble. You means somebody is in trouble. Okay. Remittance of course, if you can, without knowledge, if you do in cash, nobody will ever know. And if you're going to route it, if you're going to through the bank, you can't do it. And that is why 3 is there. Please note, 3 is there. Only for the 3 is an overall prohibition. If you do it with otherwise than through an authorized person, straight away it is an offense under section 3. Stiff penalty and punishment. Okay. So that is the answer. Similarly, container detention charges are levied for not clearing the goods from the port. If you want to pay in foreign currency, you have to get permission from Ministry of Surface Transport, right? Remittance of prize money or sponsorship of sports activity by a person other than international, national, or state level bodies. Okay. So you have to get the Ministry of HRD, right? So, friends, you are a person, you want to set up you want to send money you want to sponsor somebody to go abroad, okay? Or you have received the prize. For example, see, you are a chess player. No, not you. Somebody is a chess player from Argentina. That person has come to India and won the chess championship. That amount is, for example, let us say $50,000 equivalent. Now, he or she wants to, take it abroad. No problem. Suppose the amount involved is exceeding $100,000, then they can't take it out unless they get the permission from Ministry of HRD. Exception, suppose the chess competition is being conducted by the National Chess Authority, Chess Association, then no problem. Because the National Authority, which is recognized by the Ministry of Sports and Development, automatically it will be, okay, even if it exceeds 100,000, take it. Finally, remittance for membership of P&A club, that is for insurance, okay? If you, then this is, you have to get permission from Ministry of Finance. Right? Now, these matters, are not prohibited. They are permitted. But up to a limit, free. Beyond the limit, you have to get permission from Reserve Bank of India. So, as rightly pointed out by my friend Shankaran, the limit is now 250,000, sir. I totally stand corrected, Mr. Shankaran, and I thank you for correcting me, though the slide is correctly taken from because I update it regularly, but in my mind, somehow I parked it as 200,000. Somehow the old limit is not going out of my mind. Okay, good. So, private visits to any country, you want to go anywhere in the world, you have to take money, cloud. In 1 year, you can take up to $250,000. Gift or donation, you want to give a gift to your brother living in California, go ahead, up to 50,000. Nowadays, many children who are studying abroad, not getting job abroad, they are taking their parents' money from India and spending it. And parent also selling all their property and sending it to US or Canada, thinking that the child will one day become a big shot and take care of them. Anyway, I don't know what is going to happen. Okay. Gift or donation, going abroad for employment. So you want to go abroad for employment, you need some money to go now to set up your house and to just start. Emigration, emigration means going out once and for all out of India. Immigration is coming to India. Emigration going out of India. Maintenance of close relatives abroad. Travel for business or attending a conference or specialized training or for medical expenses, etc. Or expenses in connection with medical treatment abroad, studies abroad, any other current account transaction. All these 9 items put together, limit is 250,000. All these items put together, single limit. This is the upper, this is it. You distribute it any way you want. You distribute it in any way you want. All these items, maximum $250,000. Enjoy. You can make this through the liberalized remittance scheme. They permit you. Okay. Then enjoy. For the purposes mentioned in 4, 7, and 8. 4 immigration, 7 medical treatment, 8 studies abroad. Individual may avail of exchange facility for an amount in excess of the above limit, LRS, if it is so required by a country of immigration or the medical institute. So in those cases alone, you can go beyond, provided you show proof that that country of immigration or medical institute or university is, you need to pay more. If you show, they give you that also. No problem. Okay. Once you remit any amount under LRS in financial year, then the applicable limit for such individual would be reduced from 250,000 to the limit so limited. So you keep on using the limit. Balance only you can use for the next transaction till for the whole year you can use only $250,000. And thank you, Mr. Shankaran, once again for your thing. A person who is resident but not permanently resident in India and a citizen of a foreign state other than Pakistan, or is a citizen of India who is on deputation to the office or branch of a foreign company in India, can make up to his net salary. See, this is a classic example. A French citizen or a Belgian comes to India for working. He is a resident but not permanently resident. Now he can make entire remittance of his net salary after deduction of taxes and PF. He can send it to his family abroad. Similarly, there may be a citizen of India who went abroad, is employed by a foreign company, and is deputed to India for the branch. Then that gentleman may make complete remittance of such. See, he is a citizen of India. Then you will ask me, sir, who is resident but permanently? No, don't go to Income Tax Act. Here itself they say, who is, for the purpose of this item, a person resident in India on account of his employment or deputation or for a specific job or assignment, the duration of which does not exceed 3 years, is a resident but not permanently resident. This is a special definition applicable only to FEMA. Don't go to IT Act for this. Okay. 3 years, he has come to India for job. That's what it means. Okay. Emigration means going out of India permanently. Emigration. Okay, bye. You won't come back to India. Enjoy. Emigration. The opposite of emigration is immigration. I-M-M-I-gration. Immigration means coming to India. Normally, emigration means going out of India permanently. Though, when you go to the airport, thing, they will call it immigration. They will use immigration in immigration neutral. They will not try to distinguish. But generally, even if you go for a holiday, it is called immigration. But the understanding is, once you emigrate, you go out once and for all. That's why it's called emigrate. Once emigrate. See, the Jews were immigrants. They came to US as immigrants. They came running from Germany to USA, immigrants. So we have, from certain other countries, the people come into our country, immigrants. Okay. So, continuing with Schedule 3, if you want to give donations for creation of chairs in reputed education, that is, chair means one professor's salary will be entirely paid by this company, or contribution to funds promoted by educational institutes, or contribution to a technical institution. See, think about it. Mr. X is the MD of a very leading listed company in India. He studied in Yale University. Now, Yale University is an alumni of Yale University. So he goes back to Yale, and the Yale professors, because he's a big shot, big Indian entrepreneur, they invite him and then they say, hey, why don't you set up a chair? So he's asking, how much you have to give? Say, maximum what you want person salary, I this $700,000, $800,000 per annum. Are you okay? Then he does the calculation, says his annual profits are 200 crores in India. He said, chalo, I'll do it. I will create a chair in honor of my esteemed father. We will create a chair. So, or my name, whatever, the chair will be there. That chair means, don't think he will give a chair. What it means is that professor, will be designated as so-and-so company chair, Kellogg chair, Microsoft chair. So that person will be paid by this company. The idea is the university doesn't pay. And generally, the chair will be created in a subject which is related to this company's business, so that the research will be done by the person, and so it will be a mutual understanding. So for that, you want to remit money, then you can remit up to 1% of the Forex earnings during the previous 3 financial years, or $5 million, whichever is less. So sometimes the Forex earnings will be more than $5 million, 1%, or 5 million, whichever is less. Okay, you can send up to 1% of $5 million or $5 million, whichever is less. Okay. Where there are agents abroad for sale of residential flats or commercial plots in India, then you can send up to $25,000 or 5% of the inward remittance. See, some of these payments, you can make it out of an RFC. I told you, resident foreign currency account, or an EEFC, exchange earners foreign currency account. If so, then this limit will not apply. See, in an earlier year, let us say that you are giving consulting to companies, online consulting, and you are earning in dollar. Instead of converting into INR, what you can do, you can open a RFC account, resident foreign currency account. And these payments you can make out of RFC or EEFC. If you do that, then this limit of 250,000 will not be exhausted. Many of these expenses. But this commission, if you want to make, you cannot make it out of RFC or EFC. There's a limit of $25,000. If you're going beyond that, you have to get permission from RBI. If remittances for any consulting services procured from outside India, straight away $10 million per project for infrastructure, 1 million for other consultancy services. This is a very, very open item. Many companies, banks, they encourage people to send money through this head. Some money they want to send, they will come and beg. He say, okay, sir, other consultancy services, you send it $1 million. Up to 1 million I can give. RBI will not permit, because the authorized dealer has permission up to $1 million. They will allow it to be sent. What consultancy, God only knows. Okay. For example, the MD goes to New York and asks, where is Madison Avenue? He says that is Madison Avenue. Consulting services, $1 million. Straight away. What is this? So remittances by an entity in India by way of reimbursement of pre-incorporation expenses. See, you are incorporating a company in Canada. For that, pre-incorporation expenses are there. You have to pay it to the lawyer there. Allowed up to $100,000, you send it. No problem. Okay, these are all reasonable restrictions. Okay. If the transaction is not listed in any of the above three, it can be freely undertaken. And remittances made for transactions in Schedule 2 and Schedule 3 from RFC and EFC account do not require approval. Okay. This is. So we have come to one level. We have finished current account transaction, which is pretty good. And Mr. G, an Indian national, desires to obtain Forex on current account transactions for the following purposes. Payment of commission on exports made towards equity investment in wholly owned subsidiary abroad. Prohibited. Schedule 1, prohibited. Remittance of hiring charges of transponder by TV channel You have to get approval from the Ministry of Information and Broadcasting. Okay. Mr. F, an Indian national, desires to obtain Forex. Payment of 10,000 as commission on. See, just try to mug up this, yeah. One of this will come. Try to mug up or remember this. Definitely one of this will come. Just if you see its ugly face, remember it is more prohibited. Okay. Similarly, 30,000 for a business trip to UK. In those days, there was a limit of $25,000 for business trip. Now there is no limit, up to 250,000. Remittance of US dollar 200,000. Please be careful. This is coming under Schedule 2, and it is more than $100,000 for payment as prize money to the winning team in a hockey tournament to be held in Australia. You have to get the permission from the ministry, because this is not sponsored by any national association. This is A Limited, an Indian company, desired to obtain. See, similar. Do you notice how these questions are standard? There will be one prohibited, one ministry approval, one RBI approval, like that. US dollar 10,000 for payment for goods purchased from a party situated in Nepal. See, Nepal and Bhutan are two countries which have to accept INR. If you have traveled into Nepal or Bhutan, you know. But be careful, they do not accept our 2,000 rupee note. Even 500 rupee note, they hesitate. They want less than 500, 100 rupee note, 200, because they are worried about counterfeits. But they are supposed to accept Indian currency, INR. They are not supposed to ask payment in dollar. Okay, we have a treaty with them, Nepal and Bhutan, because everything they take from us, they owe us. So we are telling, no way we are going to give you foreign currency. No way. You take my currency. Okay, if you have a problem, go to hell, because then I won't supply goods to you. Okay, if you want my goods, you pay. You are going to pay me in rupee now. You accept in rupee also. That's all. So there you are not allowed to make a payment in US dollar. US dollar 10,000 for remitting a commission to its agent in USA for sale of commercial plot situated near Bangalore. Okay. The consideration has been received in foreign currency. Please be careful. You cannot give more than 25,000 or 5% of the inward remittance, whichever is more. So check out. You want to pay how much? $10,000, 100,000. So you can pay whichever is more. Allowed. Please do. So 100,000 is the inward remittance now. So you can pay up to 5% of the inward remittance. So 5% of the inward remittance is 100 into 5%, $5,000. Or $25,000, whichever is more. So you can pay him $10,000. No problem. It's like that. There are similar questions are there. Gopal, a senior artist, wants to go for a cultural tour. You have to get the permission from the Ministry of Culture. Like that, just have to remember it, that's all. Shah proposes to visit United States on a business tour up to $250,000 liberalized remittance scheme. See, earlier there was a limit of $25,000. Now it is not there. Similar, Rohan. Okay, kindly go through it. It is nothing great. Now we move on to capital account transaction. Right? Just give me 1 minute. Then hot water one. Capital account transaction. We saw current account transaction. Now we are going to see capital account transaction. Right? Definition. When we saw current account transaction, we said a current account transaction is one which is not a capital account transaction. Now they are defining capital account transaction. What is it? A transaction which alters assets or liabilities in India belonging to a person resident outside India. So assets or liabilities are in India. These assets are being altered. Alteration includes buying, selling, whatever. Okay, destroying, anything is an alteration. So if a person resident outside India wants to buy, sell, or dispose of an asset or acquire a liability in India, it is a capital account transaction. Similarly, asset or liability, including contingent liability, outside India belonging to a PRIA. So PRIA is in India. PROI outside India. Now, PRII is altering an asset, liability, or contingent liability outside India, or PROI is altering an asset or liability in India. You might ask me, sir, for PROI, they are only talking about asset or liability. Whereas for PRII, they are saying asset liability, including contingent liability. What does it mean? I'll give a simple example. My cousin is staying abroad. Okay. He wants to, buy some house in India. Now he's going to borrow from a bank. Now he says, Shrikant, you give a guarantee to that bank. So I'm saying, okay, I'll give a guarantee. Now, the minute I give the guarantee to a foreign bank, I am creating a contingent liability. Guarantee is a contingent liability. Means, why is it a contingent liability? In case, if my cousin does not pay, I have to pay to a PROI. So, Government of India says, no, you cannot create a contingent liability also. Also, you cannot take a liability. I cannot go directly borrow. No, I cannot buy. Unless, see, capital account transactions are prohibited. Unless specifically permitted. Similarly, a foreigner cannot come to India and buy an asset. Or even lending by foreigners or borrowing also not allowed. Lending also, you have to be careful because lending amounts to, if a foreigner is lending, PROI is lending money, it amounts to creating an asset in India. So, alteration of asset or liability in India by a PROI is a capital account transaction. Alteration of assets or liabilities, including contingent liability outside India by a PRII is capital account transaction. So, are you able to see the cross-border nature? Either the party is in India or the asset or liability is in India. If the party is in India, asset or liability is outside India. If the party is outside India, asset or liability is in India. So there should be a cross when either you go there or he comes here, not allowed. See, if you go to Greece, okay, the government of Greece does not prevent you from buying, but your country prevents you. You are a PRIA. You go to Greece, Mykonos Island, you love the villa, you are having the money, you want to buy it. Your taxed money, hard-earned money, you want to buy it. Sorry, sir, you cannot buy it unless you know this 250,000 is there in a liberalized scheme. In that amount, you can buy. Provided if once you use the 250,000, again you don't have anything for 1 year. The 250 is the limit for 1 year. So once you buy that Mykonos Island, that's it gone. That year you can't again buy anything, do anything. You can't send money out of India, but you can use it for that. But the liberalized remittance scheme has come as a panacea for all our problems. You can take any amount of money out. Okay, so any person may sell or draw foreign exchange to or from an authorized person for a capital account transaction in accordance with the regulations made by Reserve Bank of India. Okay. RBI may specifically permit, like for example, the LRS scheme is a specific permission. Sir, why purchasing a villa in Mykonos? You want to invest in, for example, Amazon. You want to invest in Facebook. You want to, whatever you want to do, you want to invest. Then you can take it out. Take out. Why? Buying, invest in shares. Nobody can prevent you. Up to $250,000, go, enjoy, invest. Okay. In fact, the scheme is itself available now. You can take your money out and invest. Yeah. Yes, Rudraj, I also regret that I told mug up. But what to do? See, this is, if you can try to understand it, good. I have tried my best to help you understand this. I've given you explanations, but if you still find, then mug it up and go. What more I can do? I appreciate that you observed. I am the last person who will encourage mug up. And that's why you notice that I spent time on this. I tried to give you some rationalization. But still, if you feel that I don't understand anything, also you try to, because that way, if you get a question in the exam and you see its ugly face and you match the following, then you answer correctly. It is prohibited, Schedule 1, Rule 3, prohibited. Straight away, you'll get 2 marks. Yeah, straight away. Why should I prevent you from getting 2 marks? Okay. So this is what it is. Capital account transactions are pretty simple topic. One important point you have to remember. Okay. That is, The Reserve Bank may by regulation prohibit, restrict or regulate establishment in India for branch or other place in India. Let's not bother about this. And section 6 is per se over, but under the regulations, capital account transaction regulation, a PROI is prohibited. Please understand. That is why Mr. Ruturaj was asking me, I think, why should I know all this PROI, PRIA? Because PROI, is prohibited. PROI is prohibited from making investments in India. So sometimes, they will come to me and say, sir, I'm OCI now. Okay, sir, you are OCI. What do you want me to do about it? OCI means overseas citizen of India. Okay, I'm suitably frightened. Tell me what do you want me to do? No, I'm a PIO, right? I'm further frightened. I'm shivering. Can you not see me sweating? No, tell me what you want. No, I want to invest in agricultural plantation activities. Then I will ask him, brother, OCA, PIO, let's keep it aside. Are you a PRI or PROI? Give me your passport. Then I'll find that he's a PROI. That means he's prohibited from making investment in India in any form, in any company, partnership, or proprietary concern, whether incorporated or not, which is engaged or is proposed to engage in chit fund business, you can't give. Nidhi company, no. Agricultural or plantation activities, prohibited. Please note, prohibited. Got it? Prohibited. And you are not allowed to do it. In real estate business or construction of farmhouses, not allowed. Only thing, suppose you are developing townships or you are constructing residential or commercial premises, etc., they allow bringing in of FDI. Otherwise, no. Okay. Similarly, transferable development rights are there. Suppose you are a company which is saving on in environmental protection, you are doing something. They'll give you TDR, transferable developmental rights, which means that normal FSA may be something in one area, the floor space index. If you have the TDR, now you can extend that FSA slightly. Now, if you are a builder, you want to build a little more square feet you want to achieve in the given land, but there's the township planning authority says you can't, then they will say, if you have a TDR, you give me, I will exchange. So you have to buy the TDR from somebody who has earned it by reducing the carbon emission and all. They'll give you TDR. So that TDR will be traded in a market now. Now that trading in TDR cannot be done by a PROI cannot invest in a company which is engaged in trading in TDR. So idea is TDR is one other method of real estate now. It deals with land. So they say no. Okay. So these are prohibited. Please remember, these are absolutely prohibited. No way you can do this. Mr. Banda, a software engineer of Indian origin. See, this is taken from a final exam. So one portion of this question is not relevant for you. Okay. So Mr. Banda, a software engineer of Indian origin. Okay. Of Indian origin, took employment in USA. He is a resident of USA for a long time. Are you able to see the point? This person of Indian origin don't get covered. This PIO, OCA and all, just I look at them and smile. Okay, you are a PIO. Now you are not in India. No, what do you want me to do? Tell me. Are you a resident? No. Now you tell me what you want to do. Bandaji, what do you want to do? I want to acquire a farmhouse in Munnar in Kerala. Sorry, not allowed. Next topic. What to do? No. I am PIO. Sorry, you are a PRO. You have been a resident of USA for a long time. So I shall presume that for the relevant year, you are a PROI. Sorry, sir, you cannot buy. Next, I want to make investment in KLJ Nidhi Limited, registered as. Sorry, cannot be done. Are you able to understand what I'm saying? Poor fellow Panda, he'll get very angry. Then, lastly, I want to make investment in Rose Real Estate Limited, Indian company formed for development of township. Oh, development of township. Okay, Rose Real Estate are allowed here. Oh, though it's called real estate, it is engaged in township, development of township. Oh, that is allowed here. Go. Plus, Banda breathes. At least this chartered accountant Srikanth is giving me one hope. What to do? See, because I want to satisfy Banda, I cannot advise him wrongly on the law. Am I correct? Now, this Banda story doesn't end. See, this guy, he wants to go on appeal and all what to do, but this part of it is not for you. It is not only this transactions which are prohibited, they will expect you to No. Okay. So these are prohibited. Then I told you now the LRS limit can be used for capital account transaction also. Are you able to understand? Currently, it is 250,000, as rightly pointed out by Mr. Shankar. Okay. Now, unfortunately, I said 200,000. Kindly ignore my words. What is given in the slide is correct. Okay. Now, where the drawal under this head exceeds the LRS limit, then further drawals, even for current account, will require approval. Please note, 250,000 is common capital account as well as for current account. If you are exhausted that limit, that's it. You have to go for approval for everything. Got it? Lastly, suppose you are a PROA. Okay? If you have acquired a property or owned a property when you were a PROA or inherited from a PROA, then even though now you are a PROA, you can continue to hold, own, or transfer or invest. Think about it. Mr. A went abroad in 1974. He became a citizen of the United States. Okay, he has a son. That son also citizen of United States. Okay, they live in Dallas in Texas. Got it? And that son is also a citizen. Rohan, citizen. Venkatesh went abroad, citizen. Became citizen. Rohan, born citizen. Now Rohan has a son. Okay. That son is a third generation US, though his grandfather, he is a person of Indian origin, because who is a PIO? Person of Indian origin, either of his parents or any of his grandparents were born in undivided India. So clearly Venkat was born in undivided India. Well, so PIO means any person, any of whose parents, means either mother or father, or either of his parents or any of his grandparents, either mother's father, mother, or father's father, mother, were born in undivided India, then they become PIO, person of Indian origin. Okay. So clearly this third fellow is a PIO, but doesn't matter for me. Basically, he's a. Okay. Now what happens? They have accumulated a lot of assets in Texas. And then this fellow, that last, that boy, for want of better name, you call him James. Okay, why not? Texas born guy, but definitely they'll not call him Sadagopan. So they call him James. Okay, now that James suddenly realizes, my God, maybe he heard my lecture or something. Maybe he heard it, somebody, took a video of what I told and put it on that. And he heard Janani Janmabhoomi, oh my God, Ram Janmabhoomi, I'm feeling so bad. I'm unpatriotic. Get out, I want to go back to India. Man comes back to India, stays in India for 3 years, becomes a PRIA. Now you followed the story up to here. Maybe he changed his name also to some other better name. Okay, Sadagopan. Then he comes to India and he becomes PRIA. Now, this man is a PRIA. Technically, he cannot hold, own, or transfer in a foreign currency or foreign security immovable property normally. But suppose that property was acquired, held, or owned by him when he was a PROI or inherited from a PROI, then he can continue to hold, own, transfer, or invest in that foreign currency or foreign security or any immovable property situated outside India. So even though he has become a PRIA, he can continue to buy or sell or do whatever he wants with the Dallas properties. And Indian government has objected, no problem. Because it was acquired or he was inherited when he was a PROI or from a PROI. Okay, you have understood this? Reverse. This is easy. Okay. Somebody goes from Kerala all the way to Canada and he settles there, becomes a big shot. Okay, but still the Tharwad property is there. Are you able to understand? Now he is a PROI, big shot. He is a big shot. He is advisor to the Canadian government. Such a man. But he is basically from Thrissur and he's got a Tharwad property there. Okay. That property, though he is a PROI, he can continue to hold, own, transfer, or invest in Indian currency, Indian security, or immovable property in India. If the same was acquired, held, or owned by him when he was a PROI or inherited from a PROI. Okay. Same logic, na. Tharwad is family property, ma. So he is inherited from a PROI. So if all the brothers are decided to sell, they'll call him, hey, come on, yeah, tell me what to do. You are sitting in, no, sell it and send the money to me, no problem. Send it. Nothing can be done because he can continue to hold, own, or transfer. Okay, got it? My dear friends, I have uploaded all the notes up to date. Till yesterday, I have uploaded. If you have any problem, approach the institute and find out from the portal why it's not coming. Management and admission, everything uploaded. FEMA also will be uploaded tomorrow. Okay, I will do it. Okay, absolutely, Rudraj, you are correct. This restriction on real estate and all is meant for that, to prevent foreigners from acquiring land and ultimately reducing land resource, which is exactly what the East India Company did. They raped us. So no way we are going to allow them to get into agriculture. See, all the tea estates they were running, or precious tea estates, the tea resources, they were raping us, literally. Tea, cardamom, pepper, opium, indigo, they were cheating us. So that is the point. That is why they say, no way you'll again come and buy land in my country. No way you'll again have a agriculture or plantation activity. So this is the beautiful topic of FEMA, restricted to section 6 only for your exam. Beyond that, you need not know. It's a very simple topic. Try to read it. It's a new topic, definitely will be tested. And I've also given you some broad questions where they could ask you. Try to go through it. Notes will be uploaded, inshallah, tomorrow. Kindly bear with me because today my secretary has left. So tomorrow when she comes, I will ask her to upload it. Kindly bear with me. Tomorrow it will come. All the other earlier notes have been uploaded. Kindly check up, please. Thank you very much and really enjoyed these discussions. I'll definitely go through Ruturaj's detailed note on why penalty should not be on the company. Quite interesting topic. I'll go through it and I will get back to you. Okay, so thank you, Ruturaj, and looking forward to more interaction tomorrow when we'll take up the General Clauses Act, another very beautiful enactment. We'll enjoy talking about the General Clauses Act. So till then, good night, goodbye, bye.